Hi there, and thank you for joining me for the week ahead with Larry Hatheway, Chief Economist at UBS in London. So Larry, let's begin by looking at the US as various US indicators are due for release, including the Conference Board measure of consumer confidence, new and pending home sales, plus a couple of house price measures. The US economy seems to be on a path of recovery and housing is picking up. Now, what do you expect to see in terms of US data for the week ahead? And of course, do you think there are risks of exacerbating the equity market sell-off as well as putting upward pressure on bond yields and the US dollar?
Well, I would expect that for the most part the data will continue to show a slow gradual recovery of the U.S. economy, with both consumer confidence maintaining some of the recent gains and the same story being true with regard to various housing indicators, be they activity or prices. The housing market recovery in particular is of great interest to the markets. It is broad-based. We're seeing it in all geographic regions. We're also seeing it in all forms of activity, sales, construction, and prices. And I think the data will continue to basically portray things that way. From the point of view of markets, of course, they're quite now sensitive to any of the factors that might influence the timing and the sort of speed of adjustment of the Federal Reserve that was essentially indicated by the chairman in his press conference following the last meeting of the FOMC. And from that perspective, strong data probably will tend to push bond yields a little bit higher, which could cause obviously some other, let's say, more volatile conditions in capital markets as we go through this assessment process of how quickly the Fed's going to move.
Now, Larry, let's move on to the Eurozone. Recent indicators suggest the German economy will have grown in the second quarter, and those for the Euro area economy generally have pointed towards a gradual stabilization. Now, what do you expect to see this week? And of course, are you feeling positive?
Well, I think what we're seeing already, and IFO will probably confirm this as your question suggests, is that the recession that has visited the entire Eurozone is lessening, and that Germany is going to avoid sort of a formal definition of recession, that is consecutive quarters of falling output. It's going to kind of just scrape by because German activity has obviously itself been fairly weak in the course of the last two quarters. But I think the IFO survey, along with what we have seen recently, which is PMIs, especially in the services area, becoming less negative and beating to some extent the expectations of the consensus estimates, is a pretty strong indication that the recession in the Eurozone is beginning to become less severe. In the parlance, the second derivatives are turning positive, and that's, I think, going to lend some support to the notion that this isn't just now about a U.S.-led recovery, that the drag that has been Europe on world economic activity is going to be lessening as we get into the second half of 2013.
And now looking at the UK, we will be closely keeping an eye on Thursday's revisions to Q1 GDP, as they will be the annual Blue Book revisions and therefore potentially widespread. Now, Chancellor George Osborne presents his spending review on Wednesday. What type of a week do you think it will be for the UK?
Right. So watching the Q1 GDP numbers in the UK is going to be of some interest because while the headline surprised everyone in terms of some strength, in the details there were some things that were perhaps not quite so positive, a little bit too much in terms of restocking, not enough in terms of final demand. But more recent data on retail sales suggests that the UK consumer is getting a little bit livelier, and that's a good thing. And if to the extent that revisions point towards a better mix of growth, then I think there'll be reconfirmation that the UK is not going to suffer the proverbial triple dip, that its economy is also beginning to stabilize, and indeed, ahead of the Eurozone beginning to grow. We do expect it to actually outperform the Eurozone in the course of the period ahead. From the point of view of the spending review and fiscal policy more generally, the evidence that we've had from the United States in the course of the last year or so is that nothing quite works in terms of stabilizing the fiscal position like a bit of growth. And while it's too early to say that the UK is yet going to benefit from any pickup in activity in terms of how it looks for the budget numbers, in the back of everyone's mind must be that if the UK does grow over the course of the next 12 months or so, the pressures on fiscal adjustment will be less. That said, Osborne has obviously been working very diligently and in some ways very sort of, let's say, carefully with members of government to try to find the spending reductions that he needs to meet his objectives. And I think what we're going to find is that it's been a challenging process, but that certainly the commitment towards fiscal adjustment is unchanged with regard to the coalition government and with regard to how Osborne places that as a priority of this particular parliament.
And finally, moving over to Asia. Japanese PMI and industrial production may indicate whether the economy's momentum in Q1 is being maintained in Q2 or not. Now, in terms of Asia, Larry, are you feeling bullish or bearish?
Well, in contrast to somewhat improving data in the United States and the inflection point I described before about Europe, the challenge in the emerging complex is one of a slowdown, and a slowdown that is still underway. It's been reflected in a lot of different data, but most of it in areas of manufacturing, trade, and production. In fact, globally, when one looks at say, purchasing manager indices, it's the services sectors that are holding up, it's the manufacturing sectors that are weak. And unfortunately for Asia, especially non-Japan Asia, that's really what drives economic activity there is production of goods and the trade of those goods. And therefore, I think that the data that we're going to see out of the emerging complex generally and Asia in particular is probably going to still be reflective of the fact that leadership today in the world economy is much more services-based than it is output-based, and therefore their economies are likely to lag and probably still show growth that is falling short of what people were hoping to see.
Thank you very much, Larry, for that. Well, viewers, do stay tuned to Dukascopy TV for more economic analysis and Forex updates. But for now, have a good day.